Welcome, dear traders, it's me, Kate Tichina, and you are watching a recap of the Asian session. This week has been rather busy. Market participants analyzed loads of economic reports as well as remarks made by Fed policymakers and officials of other central banks. Asian stock markets are likely to end the week on a positive note, and today they managed to recover amid a rise on Wall Street yesterday. What's more, sentiment improved markedly thanks to China's upbeat economic data. Wall Street closed on Thursday with gains. U.S. government bond yields declined as risk appetite rose again. Some Fed policymakers hinted at a more balanced approach to monetary tightening. Atlanta Fed President Raphael Bostic backed a smaller rate hike by 25 basis points. He stressed that the central bank may take a pause in tightening this summer to limit risks to the economy. Apart from that, sentiment revived following China's positive macro stats. China's economy is recovering rapidly, which lowers the recession risks for the global economy. The services PMI index surged to 55 points in February from a 52.9 in January, and this was the second consecutive month of expansion and the fastest pace of recovery since August last year. Stocks in Australia, Japan, Hong Kong and China edged higher. Traders also digested data from Japan. Unemployment in the country decreased while the services sector showed robust growth in February. New Zealand shares fell, ending the week with losses. Consumer confidence in New Zealand declined in February from a 3-month high in January due to strong price pressure. Despite the overall optimism, investors were cautious ahead of China's annual parliament session. At Sunday's event, the government will announce new economic projections and unveil the government reshuffle. The US dollar index managed to consolidate around 105 on the Thursday as investors continue to assess the prospects of the Fed's monetary policy in the light of recent comments. While Bostic supported a quarter percentage point rate hike, Christopher Waller made a hawkish speech. He assumes that rates may be raised higher if the labor market and inflation do not cool down as expected. On Thursday, the US dollar rose by about 0.6% after fresh data signaled a tighter labor market. It reinforced expectations that the regulator would stick to a hawkish stance for a longer time. In the morning, the US currency retreated as hopes for a balanced approach by the Fed outweighed the risks of a more aggressive stance. In addition, China's data boosted the risk on sentiment. The greenback may roll back to the Wednesday's level. Traders are now waiting for the US services PMI index and the fresh comments from Fed officials. One should pay attention to the February high around 105.30. If the US dollar breaks above this level, it may approach the January high. If not, it will resume a downward movement. Japanese policymakers also provided some comments today after the release of the Consumer Price Index. The indicator remained unchanged. Finance Minister Shunichi Suzuki said that the government would accelerate the implementation of measures adopted by the extra budget to cope with the rising energy and food prices. He also expects the Bank of Japan to conduct monetary policy appropriately. The dollar-yen pair jumped above 137 on the Thursday after the release of the US economic data. It approached its highest level since December 20. However, the quotes retreated from this high later, trading at 136. On a Friday morning, the pair entered the red zone. Overall, the yen notched the worst weekly performance among Asian-Pacific currencies. The Australian dollar took a second place, and the yen is unable to regain momentum due to rising government bond yields around the world, amid signs of persistent inflation. The pair is now facing a strong resistance level of 137. A weekly close above this level will push the price to the November high of 138. If it fails to consolidate above 137 in the coming session, this will increase the likelihood of a bearish correction. The Australian and the New Zealand dollars stabilized at the end of the week, and this was facilitated the softer comments from some Fed members and China's upbeat data. The AUD-USD pair gained 0.3%, trading at 0.6750. During the previous session, it declined by 0.4% to 0.6705, approaching the general low of 0.6690. Since the start of the week, the Australian dollar was climbed by 0.3%. To maintain the upward correction, it needs to break above the 0.6790 level. The Australian currency has grown in recent months due to an improved risk-on sentiment after the reopening of the Chinese economy. However, the pair is still undervalued. Perhaps this factor will eventually bolster the Aussie, and the short-term outlook remains vague. In the first half of the year, the bearish sentiment is likely to persist. However, the Australian dollar is expected to surge in the second half of the year, provided that economic reports will be positive. Currently, analysts are anticipating China's macro stats for March. They expect to see signs of a pent-up demand after the resumption of production. It could limit the decline of the Aussie. By the end of the year, the pair is likely to hit a 0.7400. The Kiwi dollar pair was hovering around 0.6230 in the morning. In the previous session, it dipped by 0.6% to 0.6199. On Tuesday, the New Zealand dollar fell to a 3-month low of 0.6135. And despite a relatively negative week, the Kiwi is likely to enter it with gains. Since Monday, the Kiwi dollar pair has advanced by 1%. It may also try to test the resistance level of 0.6265. After that, the pair is expected to take a nosedive to 0.6035. However, an upward movement looks likely if the pair breaks above 0.6335. And in this case, it could climb above 0.6545. And that's all for now. Don't miss our next video review. Please leave your comment down below and see you soon.